Hey everybody, it's Roxy from the trading floor. I'm here today to talk to you guys about consolidation. I'm going to cover both higher time frame and lower time frame consolidation. Some tips on how to spot it, and instead of telling you, hey, just don't trade it, let's discuss ways that you can trade consolidation. Okay, so I'm going to cover the concept of measured moves, but also measuring legs and price movement. That measurement allows you to visually see when price is exhausting itself. And you have the potential where price is going to move into a consolidation and or a reversal or continuation after the consolidation. Let's take a look at this example here on the NAS 100 1-hour chart, also known as US 100. Okay, you can see here that I have the first leg of price movement. This was an initial reversal in price. And the way that a measured move works is that you can typically expect that after the initial pullback off of the first leg in price movement, you can expect it to go roughly the same distance before it will consolidate or move into a larger reversal from that location. So if we measure this out here to roughly the same location, you can see that price moved to roughly that same location. And you can see that along the way, it was pushing its way up, but it began to exhaust itself. It made a smaller here initial push, initial impulsive move here before the movement started to. And if you trace out your higher lows and higher highs, you can see visually that the market is starting to exhaust itself and slow. When you see a movement followed by a second impulsive movement and then this market exhaustion, that is a clear indication that you are either already in or entering into a period of consolidation. So, how you can look for this is the measured moves. The other way that you can look for this is to mark out your higher highs, higher lows, or in the case of a bearish movement, your lower highs and lower lows, and look for it to start to visually tip sideways. That is an indication that you are entering into consolidation. Now let's highlight this consolidation zone right here. Okay, and I'm going to remove this highlight from here. Okay, so I want you to be able to clearly see this consolidation area. Now why I highlight this as the consolidation area is because we have our previous low here and we have our high here. This area you can see is where price started to exhaust itself. Now, a market can only move so long in any given direction. So we had our movement up, we had our pullback, now we have our next leg in price movement upward here. At that point in time, I will be expecting it to move into consolidation. What can it do after consolidation? It can either reverse from that or it can continue another leg in the price movement. If it continues another leg in the price movement, at that point in time on the third leg, I will be expecting it to make a larger pullback, which you can see here. Price made a much larger pullback from that location after, again, it moved into consolidation. Okay, so how do you trade this? You always have the option not to trade consolidation and to wait for it to clearly begin trending again. In the instance where you want to trade the consolidation, I recommend one of two ways. The first way would be to trade the breakout. You're going to set a line here at the top and you're going to set an alert on that, add alert, okay? And you're going to wait for price to clearly close above your consolidation zone. Like here, it closed above. So if you are comfortable trading breakouts, that would be the trade that you're looking for. for. You wait through the consolidation, you set an alert, and you wait for the market to break out of the consolidation and provide you with your trade. You can also set an alert on the lower side of your consolidation in case it is reversing, and you can trade a breakout from that side as well. Now, if you want to trade the consolidation directly and treat it like a ranging market, you would look at this area here as your low, identify your low point, which would be, in this case, providing support if it's going to continue in the trend direction. And you would look for your criteria to be met at that area. So here you can see, for example, a pattern. This would be a double bottom pattern. And if your criteria for an entry is met when it reaches this area of previous support, then you can potentially look to take an entry from there. Those are the two ways that I recommend trading consolidation on a higher time frame, or make the choice not to trade the consolidation and wait for your entries once the market is moving again. These same principles of measuring out the movement in price and watching for where it's exhausting itself and is potentially moving into consolidation, I'm showing you on the 1 hour, but happens on all time frames. So let's look at another example here. After the third leg in price here, entered consolidation, we had a larger pullback. Again, we can measure out price and look for the same pattern where it moves up roughly the same amount, and expect that on the second leg of the movement of price that we may enter into consolidation. Again, expecting that, we can mark out our highs and lows and see as the market begins to slow and potentially tip over. When that happens, what can you do? You can draw a box around that location, and you can wait for a clear breakout. You can set your alerts here at the top of your box, and at the bottom it clearly breaks out here. You can either wait for a retracement or enter the trade there, looking to go short as the trend reverses itself. The criteria on how you take your entries is dependent on your trade system, and whether or not you can trade consolidation and have entries, or you trade the breakouts, again, is dependent on what you're comfortable with. Patience is key when you are entering into periods of consolidation. Don't rush your trades, wait for good setups. Now, if you do choose to trade when you see the market is beginning to exhaust itself and maybe entering into an area of consolidation, be aware that you may take additional losses within that area. You also may not want to hold trades in the same way. And you may take a loss entering into consolidation if you have not yet identified that the market is beginning to exhaust itself. Patience is key with this. Understand that losses do happen. Now let's jump to the lower time frame and see how you can spot and trade consolidation there. As we discussed consolidation, how it can affect you on a higher time frame, let's discuss how it can affect you on a lower time frame and what to watch out for. Here I have up what are called measured moves. The market moves in legs, or what I call legs of a price movement. Moves downward, then it's going to have a pullback before it continues the movement downward. And again, you can get a pullback and then downward again. Okay. Now in this case, I will expect to see fairly equal movements of the market. That's called a measured move. You can measure the first movement of the market and expect to see on a pullback that it will drop roughly the same amount. Now, after 2 drops of the market, I will begin to suspect and watch out for some form of consolidation or larger retracement in the market. At which point in time, I will expect to see either one of two things: that it will move into a reversal from this location, or that I will get a third movement of the market before it will do a higher time frame consolidation. And I'm going to show you that here real quick. In this case, this day, we had 2 movements. We ended up with some consolidation before it did a third and final movement here. And I'm going to go over here a little further so you can see what price did. So you had these movements, you can measure them out, you can see they're fairly equal. From that point in time, it did a little bit of consolidation before it continued again, another fairly equal movement in price. Now, at that point in time, you got a larger consolidation of price before you got a reversal. Now this reversal is a lower time frame reversal. It's not necessarily a full reversal of the market unless you see it on a higher time frame as well. But you can see these patterns playing out here. What was it going to do from here? It had one of two things it could do: reverse or continue. How do you trade consolidation? How do you spot it? That is the question. You can spot it by measuring the movements of price and understanding that it's only going to move in one direction for so long, 2 to 3 movements, especially equal movements, I would expect to see consolidation in price. This consolidation right here is larger than this consolidation right here. This consolidation is a bit trickier to trade. This can be traded more like a ranging market, where you can try to look at this and say, okay, treat this as our top, treat this as our bottom, and take it short from these locations and buy from the bottom of the range at these locations. That's how you can trade larger, higher time frame consolidation. I'll jump out to the 15-minute here, and I want to show you what that looks like. So that consolidation that you saw, that first box of green here, that is simply a higher time frame pullback. The larger range that I was discussing there when we moved into that consolidation, that is a higher time frame consolidation. And out of that higher time frame consolidation, you can see here and here that we got a double bottom pattern where it touched 2 times, and then we ended up with a reversal in price movement moving higher. Now, whether that is a full change in trend and it's going to take off, that is largely decided on the higher time frame, not the lower time frame. Again, what you see on the lower time frame in those instances, pullback, this spot right here, consolidation on the lower time frame. Higher time frames consolidation is more of a ranging market, and you need to trade accordingly. How can you spot those? Again, that is the measured price movements working its way downward. You can see that it starts to stall out. It starts to really slow here. That's a sign that it may be entering into consolidation. Slows here. You can watch for reversal patterns like this head and shoulders here, left shoulder, head, and right shoulder. When you see that, you may get a larger reversal, or you may be entering into consolidation. You can use all of these things to spot that. The additional item that you can use is moving averages to spot consolidation. Let me show you what that looks like. This is the 144 moving average, an EMA, and you can see when price is chopping back and forth along that EMA, you are in consolidation. Pulls back, it can't push and stay higher. It's not putting in a clear reversal. If that's the case, how do you trade this? Like I said, if it's a larger range, you can trade the range from areas of support and resistance. Or what you can do is you can drop a line across here. You can set an alert and you can wait for it to break out. When it breaks out, you can trade the breakout accordingly. You can take the breakout trade. It's got to close above, wait for a little bit of retracement, and take the breakout. You can wait for a larger retracement, use your indicators, use whatever you're using as your criteria for entering the trade. Here's a nice engulfing candle for a continuation of the lower time frame trend in the bullish direction. You also could have set an alert on the bottom side, assuming that it was going to potentially exit this consolidation down here, and simply not trade it. If you do not have a strategy or system that works for you to trade consolidation or a larger ranging market, then wait it out. Wait for a clear trending price movement and then trade that accordingly. Okay, I am very zoomed out here, but there's a point I want to make with this. Right hand side here, you can see this very jagged price movement. That is FOMC. That's a major news event. Ahead of that, all of this price movement on a higher time frame was simply consolidation accumulation for that news event. You can watch my video on liquidity, but here and here you can see that price moved rapidly to run the accumulated liquidity in this area right here. This is several days of accumulation ahead of a major news event. How do you trade this? Or how do you identify and avoid it? The price is clearly moving downward. Again, you can do measured movements and look for price to consolidate after those measured moves in price. Here you have some consolidation. This is near an opening of the New York session. Price drops rapidly. Again, you can measure it out here. Another drop here. After that point in time, what are you looking for? You're looking for potential reversal, which you got here, or you're looking for it to consolidate. Now, what I mentioned about the EMAs, and you can see them on here, the green one is the 1 minute 144, the red one is the 5 minute 144, and the blue one is the 15 minute 144. When New York session opened, you could see that they were all grouped together here. For me, when the EMAs are strongly grouped like this, that is a potential that price has been consolidating, is likely to continue that direction. I need to be cautious about what I'm doing. When everything is grouped together that way, that's telling you that over time, price has been slowing, it's exhausting, it's accumulating, it's consolidating. Okay. What does that mean for you? That means for you that on a day where you come in and you see, let's say that you dropped into the market right in, for example, this area right here. Okay. And you've seen that price has been moving in this fashion. What does that mean for you? I would highly recommend that if you're not good at trading a range market, what you wait for some type of breakout of the range and then you trade accordingly. You stay out of this type of price movement. Your EMAs are showing you, look how flat they are, look how squeezed together they are. This is multiple time frames showing you that there hasn't been much going on. You don't need to trade every day. You can wait for the right setups for you, trade accordingly. Be safe, guys. I hope this helps you to identify some options you have for seeing that price is slowing, that it's exhausting, that it may be entering into consolidation, and that you need to trade safely and trade accordingly. Wait for breakouts or trade it as a ranging market where you need to trade from strong points of support or resistance. Thanks for joining me.
What's up, guys? It's Jay from TTF, and I'm very excited to be bringing you a brand new free indicator that we've been working on for a while now. At this time, the indicator is called Any Oscillator Underlay, and I'll show you where to find it now. So what you want to do is you'll want to go to TradingView, log in, and then at the top here, click Indicators. In the search bar, you will type Any Oscillator, and then you should see, if you type it correctly, Any Oscillator Underlay -TTF by the trade floor. What you want to do here is favorite it and then left click. Whenever you left click it, it adds it to your screen. It'll take a little while to load. It's a pretty beefy indicator, and we're very excited for it. And so for those watching in the future, there may be a potential name change. It might not always be Any Oscillator Underlay, but please search for this. And if you can't find it, then simply go into the Discord and ask what the new name for it is or check Discord announcements. We will let everybody know if there are any updates in the future for this. But please continue along with the video to learn about the indicator because all this information will still be valid. And so this indicator is catered towards but not limited to those who have the free TradingView plan. We all know that unfortunately free TradingView plan can only allow 3 indicators, but this completely busts down the door for that because in this one indicator alone there are 8 indicators. So technically you can have 10 indicators now on your chart if you have free TradingView instead of just 3. And so what I want to go to is the settings and the inputs really quick just to show in these sub indicator display toggles the indicators that we have. And as you can see here, we have 8 of them. They might be favorites for staff and admins, but also they're super popular with all the members. So we wanted to try and include all of the main indicators that we use here all in one specific indicator, which is super cool. So what I'll do now is I will be going over the tutorial for the inputs and the style section, and then afterwards I am going to go over the alerts. In the alert section, I'm going to go over more of how to view the indicator as per se, and then also how to define the conditions for each specific indicator. So as you can see here, it is a mess with all of these 8 indicators up at once. You don't need to have all 8 indicators up, but if you want to, you can. And so getting started, you have the TSI and the Ultimate Oscillator, and they're great indicators for trend momentum as well as finding divergences. You also have the Twin RSI. It's kind of a low-key super scalper on the 1 and 5 minute that we've used every now and again the past couple years. Then you have the Stochastic RSI and Stochastic. We obviously know what those are capable of, watching Christie trade. Then you also have the Awesome Oscillator, which is kind of a low-key indicator as well, decent for momentum. Then we have the original MACD, and then we have the ORSI, which is the Outback RSI, my personal favorite, but I am a little biased. So what I like to do now is work back to the top of the inputs first and go over the general settings. So the general settings titles, the offset just means on this left side. As you could see here, you have the labels for the indicators. If you add more, so instead of 5, we'll add 10, you'll see that the titles will shift to the right soon. You'll know that the indicator is loading because you'll see this eye here at the top, and it'll be like in a circular pattern going counterclockwise. But as you see here, that changed. So if we move back to 5, you'll see that the eye will, well, the eye didn't have to move because it already inputted that thing. But the smaller the number is, the closer it'll be to the left side of the screen. The bigger, the further it'll be from the left side of the screen. So the general settings separator is simply this line that separates the indicators. I'll mark this red. As you can see here, it's just the line that separates each indicator. Then general display settings midlines is simply the midline for each specific indicator box. And so if I change it red again, you will see that the midline for each indicator will be red. And then OBOS lines is overbought and oversold. I'll change it to red again. And then you can see here in the stochastic, you'll see that overbought and oversold lines are both red. So with that being said, scrolling down, it could be a mess, but all it is each individual indicator specific settings. So please just make sure that whenever you're changing settings that you're in the right subheader for the specific indicator that you want to change. And so before I move on to alerts, I actually want to give this little nugget of knowledge because I'm pretty sure you could do this with free TradingView. If you can't, I'm sorry. But for those who have a paid TradingView plan, this could help you use this indicator more fully, and you might not know that you could do this. And so what I want to go over is the people that might be trading DeLorean. And so with that being said, we don't really need any of these except the TSI and the Ultimate Oscillator. And so what we'll see now is like, okay, I'm not that great at spotting divergences. I would still like something on my chart to kind of help me aid in that regard. So what you can do is you'll come to the top of AOU of the indicator, click the 3 dots, add indicator strategy on AOU, and then from there we'll type divergence indicator, and then in parentheses it's any oscillator by YA Trader 2. We'll click that onto the screen. And then from there, whenever it pops under the AOU, we'll go into the settings of the divergence indicator. And then from there, what we'll do is go to this indicator subcategory, and we'll click the drop down. And let's say we want to read divergences on the ultimate oscillator. We'll come all the way down to UO and click that. Whenever we do, we will see soon that it prompts divergences for us, which is super cool. And then the only problem with this is you could only do one. You can't add another one of these indicators on. You could only look at divergences on one specific indicator. So if you want to change it to TSI, then so be it. And so from there, it'll switch from the ultimate oscillator into the TSI. As you can see here, you can use this on the stochastic RSI as well, but just kind of want to give you an idea of this is a possibility even with this indicator. And so moving forward into the alerts category, what I'm going to go over them one by one unless like they're both similar in a regard. But what I'm going to start off with is the TSI. We're going to just start from the top. And so looking at the TSI, we can see here that it has the histogram line, it has the moving average. Majority of the times we're not really going to use that. And also the default settings is the default TSI settings that people like to use for DeLorean as well. So you don't really have to change anything there. Unless you have different settings, so be it. But I'm going to take the histogram off, and I'm also going to take the moving average off because we really don't need that. And so it will look something like this in that nature. And then what we'll do is we'll go to the style tab, and just to show that you can change any color on any of these. All the lines and all the color fills does not matter. You have all the customization at your disposal. But looking specifically at the TSI, we can see that the TSI signal line is blue, as you can see here, the line under here. And then our TSI line is either red or green. So for the alerts, if you want to set an alert for the TSI in this indicator, what you'll do is you'll come to the top, you'll click the three dots and add alert on the AOU. What you want to do is the first condition you want to set is the TSI because we're looking for the TSI cross. In this case, we can see that the color fill is green, so the TSI line is above the TSI signal line. So maybe what we're looking for is a cross down. So we'll set, you can keep it as crossing, you can keep it as cross up or cross down, doesn't matter. But for the example, let's just say we're waiting for this to turn red. And so from there, we'll say crossing down. Crossing down from what? And so we'll have to select the AOU again, and it's crossing, we want it to cross down from the signal line, because when it does, then we get that red color fill, and then we'll be good to go. Then for the trigger, you can only allow once. You could do once per bar close, or once per minute. It's up to you. And then open-ended alert, you could set the date on the expiration of when you would like it to happen. But you have this really long message. I recommend just deleting this message and just simply making it clean for you. So we're on Euro USD right now, so I'll type EU. We're on the 15-minute time frame, and that's very important because if you set an alert on the 15-minute time frame, then it'll stay on the 15-minute time frame even if you go to the 1 minute. So please make sure you're on the correct time frame when you're setting your alerts, because it sets alerts on whatever time frame you are applying it to. And then what we'll do is TSI crossing down, or maybe just TSI bearish, because that's what it is. And then once we click create, we're good to go. All the way to the right of the screen, you'll see this little alerts. It's like a little alarm clock. We'll click that, and as you can see, we have a EU 15-minute TSI bearish alert set. We could pause it, we can edit it, and we can even delete it, which I'm just going to do here because I don't know, it's just an example. So moving on, what we're going to do now is move to the twin RSI. So with the twin RSI, as you can see, there's 4 different colors. The main colors that we're worried about are the bright highlighted colors. So the bright red and the bright green. The duller colors are less significant because they're not as strong of signals. So what we want to do here for the alerts, which I'll go into the style tab again just to show y'all, I'm going to turn guys, it's Jay from TTF, and I'm very excited to be bringing you a brand new free indicator that we've been working on for a while now. At this time, the indicator tab again just to show y'all. So moving on, what we're going to do now is move to the twin RSI. So with the twin RSI, as you can see, there's 4 different colors. The main colors that we're worried about are the bright highlighted colors. So the bright red and the bright green. The duller colors are less significant because they're not as strong of signals. So what we want to do here for the alerts, which I'll go into the style tab again just to show y'all, I'm going to turn off the fast and slow twin RSI fills right now just so you could see the specific colors. And so what I want you to see is that the fast RSI is this light purple line, and then the blue RSI is this deep dark blue line. And so I'm going to turn the fast and slow twin on. So now that you know that, what we will do for the alerts with the twin RSI is we'll do the same thing. We'll click the three dots and add alert. And so in this case, the only difference is, like we said, the fast RSI line, if it's above, then it's either dull green or it's bright green, or if the fast is below the slow RSI, that means it's either that dull red or the bright red. And so there's two options for you for alerts. The first option is the fast RSI crossing the slow RSI. But if you want to try another option, what you could do is the fast RSI crossing the RSI base moving average. As you could see here on the screen, you could see that the fast RSI is above the moving average, and then on the next candle, the fast RSI comes all the way down here. And so if you set that alert for crossing this moving average, then there's a potential you see this bright red signal and you're good to go there. So that's the two options for the twin RSI. Moving on to the stochastic RSI and the stochastic, they're basically the same indicator, so I'm going to put them on the screen. One implements the RSI into it, the other one doesn't. But as far as alerts, it's pretty simple. We all know what the stoch does. We have this leading blue line called the K, and then we have this lagging orange line called the D. So what we'll do is I'm going to just use the stochastic RSI as a reference of it. It's the same thing as a stoch, but if we want to see it crossing up, what we're going to select is the stoch RSI K crossing up, and then select AOU, and then crossing up the stochastic RSI D. And then we're good to go there. Set your trigger, change your message, you're good to go there. For the ultimate oscillator and the MACD, they're very similar. We had simplified the MACD just to show the signal line and the MACD line. We didn't really need the histograms. It kind of complicated things for the code, so that's why you don't see that there. But I'll use the MACD as the example. If we go into the style settings, we will see that the MACD is this bright blue line, and then the MACD signal is this yellow line. Similarly, for the ultimate oscillator, the ultimate oscillator line is this light blue line, and then the moving average is this yellow line. So for the alerts with the MACD, what we'll want to do is we will select, obviously, AOU is the first condition. We'll select the MACD, and then crossing the MACD signal. Crossing up or down, whatever you prefer. Change your trigger, change your message, you're good to go. For the ultimate oscillator, what we'll do for that is we will select the UO for the first part, and then crossing up or down, whatever you choose. Then we'll select the UO moving average, and we're good to go there. Next, what we'll select is the awesome oscillator. Now, this is a little different. There's two ways of using this indicator for alerts. It's a little harder to do alerts if you stick to the histograms, but what you could potentially do is you can add an alert for the AO crossing the value of whatever your midline is. There's not a AO midline option in the conditions, unfortunately, but it might not be 50 in this case. It just so happens to be 50. If we add other indicators on the chart, it could turn from 50 to 100 to 150. So just be aware of that regard. But that is a way of using it. But this other way is kind of what I recommend you do. And so if you're looking to use the awesome oscillator, if you've never even seen it before and just want to check it out, what I recommend is actually taking off the histogram style and including the moving average. And then as you see here, this option might be on at the bottom, include AO/MA fill. If not, click that on and you'll kind of have this going here. You'll see the awesome oscillator line here, and then the awesome oscillator moving average. And then if we go into the style tabs again, you'll see here it's a very similar occurrence where the awesome oscillator is this light blue and the moving average is this yellow line. And so from there, the alerts are a lot easier in that regard. What you'll do is you'll select the AO and then crossing up or down, and then we'll select it crossing the AO moving average, and then you're good to go there. Change your trigger, change your message, and you are good. Unfortunately, we do not have alerts for the Outback RSI indicator. It's more of a visual thing. You'll have to kind of just keep in mind if it's green or if it's orange for bullish or bearish trends. And that covers everything on the any oscillator underlay. Like I stated before, even if the name changes, everything in this video will still be valid. If you have any questions, please feel free to reach out to us via support email or directly through Discord. Thanks guys, and I'll catch y'all later. Peace.